Welcome back to Gold Rush Reporter. I'm your silver analyst, and today we need to talk about something that even the veterans in the metals industry are calling unprecedented. What's happening in the silver market right now isn't just unusual, it's historic. Prices, premiums, and supply are all flashing signals that something big is brewing beneath the surface. Before we dive in, make sure you're subscribed, because this is one of those updates you don't want to miss. And let me know in the comments. Are you seeing silver shortages in your area or from your dealers? Let's get the discussion started. Over the past few months, we've seen something unlike anything in recent decades. According to industry veteran Andy Shectman, who has been in this space for over 30 years, he has never witnessed a market like this before. This isn't just about price swings or short-term panic. This time, the issue is deep and structural, centered on physical supply. For years, many of us in the metals community have been warning that this day would eventually come. The silver market has always been fragile, stretched thin between paper promises and real, deliverable metal. Now, that imbalance is catching up. COMEX inventories are shrinking, dealers are struggling to fill orders, and wholesalers are running dry. What we're seeing is not a shortage created by speculation. It's a shortage built on reality. Andy pointed out something that hit me hard. He said that people who understand what's really happening see the situation completely differently from outsiders. Most people think, I missed the price, I should have bought earlier. But insiders understand this isn't just about price, it's about availability. When physical silver becomes difficult to source, price becomes a secondary issue. You can't buy what doesn't exist, no matter how much money you have. He also made a valid point about how manipulation has shaped this market for years. Many believe that big players have been pushing paper prices down while quietly draining physical supply. And now, as the shelves empty, that game is starting to break. The deeper you look, the clearer it becomes that silver's real value isn't being reflected in its spot price. It's showing up in the premiums and the delivery delays. Andy mentioned that his own company has been able to deliver, but even then, it's getting harder every week. Wholesalers are running out of inventory, and products that used to be readily available are disappearing. That's exactly what happened in 2008 when the market froze for months. Back then, major mints in the US, Canada, Australia, and the UK had delays stretching to 16 or even 18 weeks. Premiums were over 100%. And we're starting to see those same warning signs again. This time, though, the problem looks even bigger. It's not just one region or one mint. It's a global issue. Dealers from North America to Europe and Asia are all reporting the same thing. Products are either sold out or severely limited. And what's more alarming is that this is happening earlier in the year than usual. Normally, these shortages start around late November, after mints close for the holidays. But this year, it started back in October. That alone tells us how stressed this market has become. Andy didn't sound happy to be right. He's been warning about this for years, and like many analysts, he took a lot of criticism for it. But now it's clear his warnings were justified. The sad truth is that only a small portion of the population owns any precious metals at all. And by the time the rest of the world wakes up, it'll likely be too late. When demand explodes, supply will already be gone. That's where we are now. The point where awareness is rising, but availability is shrinking. Silver isn't just an investment anymore. It's becoming a measure of who prepared early and who didn't. If this pattern continues through the end of the year, and every sign suggests it will, we could be looking at the start of something far bigger than just another supply squeeze. Andy Shectman's latest insights take us even deeper into the core of this unfolding situation. He explains that what we're seeing now is unlike anything the metals industry has dealt with before, not just in terms of demand, but in how fast physical silver is being drained out of every major exchange on the planet. The world's two largest Western markets, the COMEX and the London Metals Exchange, have together moved roughly 530 metric tons of gold over the last 5 months. That kind of volume leaving the system tells us something serious. The physical market is being emptied out while the paper price pretends everything is normal. He said that what's even more alarming is that every ounce disappearing from these Western exchanges seems to be heading east. China, for example, hit a 4-year high in gold imports this August. The entire Asian market is on a buying spree, taking whatever physical metal they can get. At the same time, Western nations continue to sell. This imbalance isn't random. It's a complete shift of wealth and real value from west to east. The question everyone should be asking right now is simple. If all the gold and silver are leaving, what's going to back the Western system when it's gone? The silver story is even more extreme. Since the so-called silver squeeze about a year and a half ago, over 115 million ounces have been removed from the COMEX. For perspective, that's nearly 3 times the amount of registered silver currently left on the exchange, only about 40 million ounces. That means the available physical silver for delivery has been collapsing. When you look at those numbers, it becomes obvious that this isn't just investor speculation. It's a silent run on the bank. Someone, maybe multiple powerful entities, has been systematically cleaning out the shelves. Even Reuters, which rarely talks about these things, confirmed what refiners are now seeing. MKS PAMP, one of the largest refiners in the world, reported that gold is trading at record high premiums in Shanghai, Dubai, and Istanbul. Those premiums are a clear signal that people are paying extra just to get physical metal in hand, no matter the cost. Silver is showing a similar pattern. In India, premiums are now triple what they normally are, and their import levels have exploded. Governments there are buying both gold and silver, likely to shore up their reserves as the global currency system gets shakier. For most of Andy's 33-year career, he said, investors in the US ignored global events. When inflation hit other nations, when currencies collapsed, or when wars broke out, Americans still poured money into stocks and bonds, thinking the system was untouchable. But that time is over. Inflation is everywhere now, and it's no longer just a domestic issue. It's global. The cracks in the dollar's dominance are showing, and you can see it clearly when you compare gold prices across currencies. Take the UK, for instance. Gold there is trading at record highs, even though the dollar index shows incredible strength. The US dollar looks powerful on paper, but in reality, it's distorting global metal prices. Gold and silver are hitting new highs in nearly every major currency except the dollar. That should make people stop and think. The strength of the dollar isn't real strength. It's a reflection of panic and manipulation. And once that artificial confidence breaks, metals will reprice violently. Andy believes this is the start of a new phase, a shift in global consciousness, where people everywhere are realizing that precious metals aren't just about profit, they're about protection. When fiat money fails, gold and silver are what remain. The West spent decades exporting manufacturing and hoarding paper assets, while the East quietly accumulated the real thing. Now, the pendulum is swinging back, and it's swinging hard. He compared this situation to 2008, but said this time it's deeper and more dangerous. Back then, the crisis was financial. This time, it's physical. You can't print silver. You can't fake supply. When the shelves are empty, that's it. Dealers can't deliver what doesn't exist. And once global confidence starts breaking, everyone will rush for what little is left. Right now, silver isn't just disappearing from the market. It's being absorbed into private hands, national reserves, and long-term holdings. The paper traders and skeptics still think this is temporary, but they're missing the point. This isn't about today's spot price. It's about tomorrow's reality. When the real shortage hits the surface, the price will be the last thing anyone worries about. Andy went on to explain that what's happening now in the metals market is a complete restructuring of global wealth. It's not just investors buying a few coins or bars anymore. It's entire nations repositioning for what comes next. Central banks across the world have been loading up on gold at the fastest pace in modern history. They're doing this quietly, while the average investor is still distracted by tech stocks and short-term market noise. But here's the part that most people miss. When central banks start buying gold, it's never about short-term profit. It's a signal that trust in the global financial system is breaking down. Andy believes the next logical move after gold is silver. Historically, silver has always followed gold, but with far more explosive returns once momentum shifts. The only reason silver hasn't yet caught up is because it's been artificially suppressed through massive paper shorting on exchanges like COMEX. But even that is starting to fail. The ratio between gold and silver prices is now so distorted, it's practically screaming opportunity. For thousands of years, the natural ratio between the two metals hovered around 15-1. Today, it's sitting near 85-1. That's unsustainable. Once the physical shortages fully hit and industrial demand spikes, silver will have no choice but to reprice drastically higher. Andy made a key point that every serious investor should understand. The people controlling the narrative around precious metals are the same ones benefiting from keeping prices low. The banks that manipulate futures markets aren't trying to make a quick profit. They're maintaining control. Cheap metals mean cheap collateral for the financial system, which keeps paper markets looking stable. But that illusion only works until physical supply disappears. And that's exactly what's happening now. He shared some staggering numbers. Industrial demand for silver is now higher than it has ever been, driven by solar panels, electric vehicles, and advanced electronics. Silver isn't just a monetary metal anymore. It's a strategic resource. Every major government talking about green energy or digital infrastructure will need massive amounts of silver. Yet, production isn't keeping up. Mines are closing, new discoveries are rare, and the cost of extraction keeps rising. When you combine that with investor demand and central bank accumulation, it's obvious where this is heading. The average person still doesn't get it. Most people think of silver as some outdated investment or something their grandparents bought. But those who study the market closely can see that we're heading into a period where silver could become one of the most strategically important assets in the world, not just because it's undervalued, but because it's essential. Every ounce that disappears into long-term storage or industrial use is one less ounce available for the open market. Once that tipping point is reached, even large institutional investors won't be able to buy physical metal at any reasonable price. And he also mentioned that the smart money has already moved. Sovereign nations are securing supply through backdoor deals and long-term contracts. Big corporations in tech and energy sectors are quietly stockpiling industrial silver, locking it away before prices move. Meanwhile, retail investors are being lulled to sleep by paper charts that show stability. But real analysts know those charts are nothing but a distraction, a smokescreen covering the cracks in the system. He described this moment as the calm before the storm. On the surface, markets seem stable, but underneath, the structure is breaking. COMEX inventories are falling. Refineries are at full capacity, and global logistics are still recovering from years of disruption. Once a major trigger event happens, whether it's a financial shock, a geopolitical escalation, or a loss of confidence in fiat currencies, the scramble for silver will begin overnight. And here's where it gets interesting. When gold moves, silver doesn't just follow, it explodes. Historically, silver outperforms gold several times over in every major bull run. That's why Andy keeps emphasizing that silver isn't just a safe haven. It's a leverage play on the collapse of trust, the kind of revaluation that could take silver to levels most investors can't even imagine right now. Andy continued by pointing out that what we're seeing now isn't just another economic cycle. It's the end of one financial era and the beginning of another. The global monetary system, which has been based on the dominance of the US dollar since World War II, is slowly being replaced. You can see it in the trade agreements, in the central bank reserves, and even in how commodities are being priced. Gold and silver are quietly reclaiming their role as the foundation of real value, while fiat currencies are losing credibility at record speed. He mentioned how countries like China, Russia, and even the BRICS alliance are openly challenging the dollar's supremacy. Their central banks aren't just talking about alternatives, they're acting. They're buying gold in record amounts, creating bilateral trade deals that bypass the dollar and even experimenting with gold-backed settlement systems. In this kind of world, silver naturally follows because of its dual nature, part monetary, part industrial. Once these nations move toward a new financial structure, silver's role will expand, not shrink. Andy's analysis makes one thing clear. The West is being left behind. While the East is accumulating real assets, the Western financial system is still trying to manage perception. That's why you still see paper markets setting prices, even though the physical markets are what actually matter. The illusion of abundance only exists on paper. In reality, the vaults are emptying. You can't run a global financial system on IOUs forever. At some point, the claims outnumber the actual assets. And that's where we are now. He said that many of his longtime clients, who used to buy silver and gold for diversification, are now buying for survival. They're not looking to make quick profits. They're trying to protect themselves from systemic risk. And that shift in psychology, from investing to preserving, is what separates this current environment from every cycle before it. People are no longer asking, how much can I make? They're asking, what will still hold value when everything else fails? And he also drew a parallel between what's happening today and the 1970s. Back then, inflation exploded, interest rates skyrocketed, and gold and silver went parabolic. But there's a critical difference. In the 1970s, the debt levels were manageable and the US still had some credibility left. Today, the global debt bubble is beyond control, and central banks are trapped. If they keep rates high, the system collapses under its own weight. If they lower rates, inflation rages out of control. Either way, the end result benefits gold and silver. He made it brutally clear that the current policies coming from central banks are nothing more than damage control. They can't fix the system because the system itself is broken. Printing money to solve a debt problem only creates a larger debt problem. Raising interest rates to fight inflation only kills economic growth. There's no clean exit. Every move they make now only accelerates the loss of confidence in paper currencies. That's why Andy keeps stressing the importance of holding something tangible. He said, when trust dies, liquidity dries up. And when liquidity dies, assets get repriced in real terms. That's exactly what precious metals represent. Real value in a world drowning in promises. The average investor doesn't realize that everything they own, stocks, bonds, even real estate, depends on confidence in the currency. Once that faith breaks, all those paper assets collapse together. The only things that survive are the ones that don't rely on anyone's promise to pay. He also warned about a dangerous assumption many people have, that they'll be able to buy silver or gold whenever they finally decide to. History shows that's never the case. When fear hits the market, the product disappears instantly. Dealers run out, mints get backlogged, and premiums explode. He reminded everyone that in 2008, even with prices crashing, physical metals were sold out everywhere because no one wanted to sell. The same will happen again, except this time it will be far worse because demand is global, not just American. And he said we're entering a phase where price will mean nothing and possession will mean everything. You won't be asking, what's the price per ounce? You'll be asking, can I even get it? That's the harsh truth most investors refuse to accept. The people who understand supply chains, inventory levels, and monetary history know exactly how this plays out. It always ends the same way, with a panic rush for real money when the fake money system finally breaks. He closed that segment by saying something that hit hard. When you see nations buying what they've spent decades selling, pay attention. That's not random, that's a warning. The same countries that once flooded the world with cheap gold and silver to suppress prices are now the biggest buyers. They're not buying because it's trendy, they're buying because they know what's coming. And when the people who understand the system best start quietly exiting it, that's when the rest of the world should start asking why. Andy wrapped up his analysis with a message that every serious investor should take to heart. He said that we're standing at a crossroads in financial history, the moment where truth and illusion finally separate. For decades, we've been living in a system fueled by paper promises, artificial confidence, and manipulated prices. But you can't fake scarcity forever. The physical market always wins in the end, and silver is about to prove that again. He pointed out that the signs are already everywhere. The world's largest refiners are working at full capacity, premiums are surging, delivery times are lengthening, and national mints are reporting record demand. Even governments, the same ones that mocked gold and silver investors for years, are now quietly restocking their vaults. That's not coincidence. That's preparation. The people at the top understand that the next phase of this transition won't be gentle. The old system is losing credibility fast, and when that happens, money always flows back into real assets. First gold, then silver. And he was blunt. There's no going back to how things were. The global economy is over-leveraged. The trust in central banks is collapsing, and currencies everywhere are bleeding value. This isn't a temporary correction or a short-term panic. It's structural decay. Once confidence is gone, it doesn't return. The question isn't whether gold and silver will rise, it's how quickly and how violently that repricing happens once the world realizes what's coming. He also made it clear that the average person still has a small window to act, but that window is closing fast. Those waiting for confirmation, waiting for the media to validate the silver story, will miss it completely. History rewards the people who prepare before the crisis, not the ones who panic after. And preparation here doesn't mean speculation. It means positioning yourself with something real, something you can hold, something that will still have value no matter what happens in the markets or politics. And he compared this moment to a chess game nearing its final move. The big players, central banks, sovereign wealth funds, and industrial giants have already made their plays. They're taking their positions quietly, efficiently, and with purpose. The public, meanwhile, is still distracted by noise. But once this last move is played, there's no restarting the game. Silver will no longer be the cheap, overlooked metal it is today. It will be the most sought-after asset in the world. And that's where we are right now, the calm before the storm. Every indicator, every historical parallel, every ounce leaving the vaults points to the same outcome, a reset of real value. Gold will lead, but silver will shock the world, with how fast and far it climbs once the system breaks. This isn't fear-mongering. It's just how cycles of monetary history work. Paper dies. Metals survive. Every time. So, if you're watching this and still wondering whether it's worth paying attention, it is. Because once the supply crunch hits full force, it won't matter how much money you have. What will matter is whether you already secured your position. This has been your Silver Analyst with Gold Rush Reporter, breaking down the reality the mainstream still refuses to face. If you found this analysis valuable, don't forget to hit that like button, drop your thoughts in the comments, and share this with someone who still thinks silver is just another commodity. It's not. It's the insurance policy for the next era of money. Stay sharp, stay informed, and as always, keep stacking. I'll see you in the next one.